In today's video, we're going to go over some of the examples that we learned about in the past lecture and showcase how some of these nuances can become profitable trading strategies. So let's just dive right in, right? So the first thing I really want to look at is the Bitcoin USD pair, and I want to go over the edge-to-edge play, right? Because again, we talked about how the edge-to-edge is essentially the earliest indication of a potential macro trend reversal, right? So we're looking at inflection points in the market, looking if we can trade against the trend to get in early, right, and then ride the meat of the trend. So let's take a look here. I think this is going to be probably relevant to most of you who've been around since 2017, the 3,000 bottom on Bitcoin, and how I used Ichimoku to gauge that bottom, right, and go long up until a later date. So getting right into it, we see price action right here. And what's one thing we notice just by looking at the Ichimoku, right? We see this large, thick cloud, right? And what do we notice right here? This flat top at 5.5 approximately, right? So we see that potentially in the future, if price gets in here, we might have a valid edge-to-edge trade, right? So again, we're not taking longs. We're not assuming, oh, look, it's a potential edge-to-edge. No, we don't have the green lit triggers. So let's let price action play out a little bit. Price plays out. We see the Tenkin and Kijun are coming closer together. Trend is in equilibrium, right? Price is close to the Tenkin and the Kijun. But what's one thing we notice here, right? So the first showcase of the Kijun bounce. When was the last time price rejected off the mean reversion of the trend? Well, it was right around here back in October of 2018, right? We had this impulse up before breaking down from that descending triangle. So October 18th was the last time price touched the Kijun, correct? So moving forward now, several months later, and we see price still has not touched the Kijun. The Kijun has trended down and is now at equilibrium with price, but we haven't had that touch, right? So we can assume the longer price goes without touching the Kijun, the more likely it is that there's going to be a mean reversion in the future, right? So that's just a point of information. We can't necessarily act on that just yet, but it's important to keep that in mind. So just looking here, actually, we had a C-clamp that resolved itself partially. What I mean by that is we see right here that we had a partial C-clamp right here and right here, but price did not go all the way to the Kijun. It stopped. So we saw the inflection point. Price went up to Tenkin, kind of trended above it, and then broke back down. So again, the C-clamp started resolving itself. We know that because Kijun started going down, right? There's no more C formation to form that C-clamp. Great. So moving forward, we're watching this price action. We let it play out a little bit, and we see that price eventually comes up to test the Kijun right here, right? So price tested the Kijun, but was not rejected, right? So we did have a little bit of a wick, but there's no sharp rejection just yet. So now, again, it's important to remember two things, right? Whenever price consolidates under resistance, that's considered bullish, right? Price isn't rejecting outright. Buyers are stepping up to the plate. On the flip side, if price ever consolidates above a previous support, that's considered bearish, right? Support isn't bouncing price, and in fact, bears are consolidating above it. Sellers are getting ready. So again, price right now is consolidating under the Kijun, and we see that with this bull flag formation, right? So right here already, if you've been paying attention to the classical chart patterns, we'll notice that this is a bull flag formation, right? And potentially an access point to take a long position. So one way, when moving forward now, when we look at what happens, right, price goes up. Great, we get this breakout. This was in fact a bull flag and we broke out, and now we just closed in the cloud. You see that, right? So what are we missing in order to take an edge to edge? Well, we see again, right, the three prerequisites: TK crossover, Chiku span above or below price, and price closing inside the cloud. Well, price definitely closed inside the cloud here. We do have Chiku span above price, but we don't have that TK cross, right? We're missing that aspect, so we cannot greenlight a potential edge to edge until we get that TK crossover. And now with our nifty tools of the trade indicator suite, we see that there is a forecasted TK cross given current prices, around the 28th of February. So this gives us a little bit of an inkling, hey, we might get that edge to edge, but we gotta give it more time to play out. So what do? We give it more time. Price continues going up a little bit, sets a higher high, then we get this pullback right down to the bottom of the cloud. And what happens? Price is about to get that TK crossover. So we're teetering on the edge, but price is inside the cloud still, and we're about to get that TK crossover. And what happens? We got it. We got that TK crossover. So right here on the 28th of February, as expected, we have all the three prerequisites met for an edge-to-edge trade, right? We have a weak TK crossover, price is inside the cloud, and Chiku span is above price. This is a green lit edge-to-edge setup. Now remember, our invalidation is going to go below the cloud. And if we're swing traders, we're even going to see that this lines up with this swing low here. So again, maybe we just blindly enter, right? We said that was a valid option. We're getting in here around 3,900. We're setting our stop loss just below the cloud, or maybe we set it right below the swing point, right, at 3,600. Either of the two are fine. It's going to be up to your discretion, your trading system. And then what's our target, right? So we see this flat cloud top at 5.5. That's great. Maybe it's going to go there. I'm not saying it won't. But realistically, if we're taking a high probability trade, we're probably going to target this edge first. So the trade setup is going to be till about 4.9. So getting in around 3.9, stop loss below the cloud around 3.6, and a target of 4.9, right? That's a 3.55 R ratio. That's really nice for high probability trades such as the edge to edge. So now, maybe this is our trade. We let it happen, we get in. But maybe we're a little more patient. Maybe we don't like the way price is interacting with the cloud. It's not clean enough for us, and that's fine. Let's use our LTE methodology to see if we can greenlight a trade entry, right? So this was our resistance over here at 3,800. We see price came back into it, kind of trying to SR flip it, right? See right there? And we got another tap at it. It's still holding. So this is our level, 3,800 level. Now we look for the trigger, right? So let's look for that trigger. Price comes back into the Kijun, gets into our level, and what happens here? What is this right here? This is a bullish engulfing candle from our desired level at 3.8. We got the pullback, and then we get the bullish engulfing. This is the trigger, right? So we have LTE level, trigger, and now we're looking for that entry. Are we market buying on this entry? Waiting for a slight pullback back to a resistance? It doesn't matter. That is your method. That is your system, your strategy. You decide that. Let's say we take this example, right? And we're setting again our stop loss below the cloud. We're getting in at 39.50, a little higher than earlier, but still valid. And what's our edge? Again, 4.9. Still around the 3.5 R multiple. That's great. But what? Maybe you waited even further. That's okay. You want more confirmation. That's fine. You let price play out. It chops around, makes a little bit of a higher high and a higher low. It's still going. And this right here is my favorite setup in the world, right there. You had your level trigger entry. If you missed it, that's okay. Price kept playing out in the cloud, right? And we also got our green twist telling us, hey, price has a bullish future. And what do we have here? This is as clean of a 3 inside up formation as you'll ever get. So maybe you waited for this 3 inside up and you just market bought that daily close. Again, stop loss going below 3,600. Targeting, again, that top edge at 4,900. Now the R ratio has changed. It's only a 1.92. But hey, we waited for more confirmation. Depending on how early you get into an edge to edge, obviously the riskier the trade is, but the higher the R multiple. But maybe you waited till here, and that's fine. A 1.92 R multiple, that's great. You let this play out, and what ends up happening? Well, there it is. Right to our edge target, a beautiful trade. Now, do you close here? I don't know. That's up to you to decide. It's based on your system. I'm a set and forgetter, so I took profit on this trade. But here's what happens. Ready? You zoom out. That was a daily. Look at the 2-day. Look what we have here now. We have another edge to edge, right? On the 2-day time frame. We have our weak TK cross. Chiku span well above price and price closing inside the cloud. So again, maybe you missed the one-day edge to edge and you see this one, that's fine. But maybe you're managing the trade, right? You're at 4.9, you're setting some stops and profit. That's awesome. Now, what are these edges? We have an edge to 5.5 as well as an edge to 5.8. And you might be managing the trade, letting it run, and you might even be adding on a pullback. But maybe there is no pullback. Price just continues on upward, completing the 2-day edge to edge, right? So this is a really nice example of a macro bottom, a trend reversal from the bullish and going on upwards. That's a beautiful edge to edge followed by a Kumo breakout. So that's really a strong way to look at what an edge to edge trade is on the Bitcoin pair. That's a personal trade I took. It's a very high probability trade. I've used it successfully time and time during the inflection points in the market. And I really encourage you to look for these edge to edges. Of course, the edge to edge is going to be much more higher of a hit rate on a high time frame versus a lower time frame. But again, play around with it, back test it, see if it fits within your trading strategy. Okay, so next right here, we're gonna get into a Kijun bounce, right? We talked about the price bouncing off the Kijun multiple times. And I think a really good spot to look at it would just be most recently, right? So we cut the playback tool, price is over here, and we saw this Kijun here. We had this really ambitious dump, right? So price is back here. Here's our Kijun flatted out at 72.60. And you might be taking a short position, you're just leaving some asks. It's a mean reversion of a huge dump we had, right? So maybe you're literally just setting asks right below the level. Maybe you have a swing stop above here. Maybe you're tightening it. It's really dependent on what you want. And maybe it's just a quick move. It's a 1-hour move. That's fine too. So price plays out. Eventually, price comes back into that Kijun, right? You get that tap, and it's rejected. And actually, it's just a quick R move. So it's a 1-hour multiple. You're in and out on a rejection. Maybe you're trying to get into a swing short. You set some stops and profit. It's up to you. I'm just showcasing how these tools can be used to create sound trading strategies, right? Crafting your system, finding your edge in the market. Are you a scalper? Are you a day trader? Are you a swing trader or a position trader? It's completely and entirely up to you. I'm just providing you the tools and framework that work for me that may resonate with you. And if they don't, that's completely fine. We've showcased a handful of tools in liquidity theory that can be used exclusively or in tandem with one another. So, moving forward, maybe that's a Kijun bounce play. Awesome. Let's go over potentially a Kumo pocket, right? So price is playing out, and we see it just keeps making higher lows and higher highs. And it's been in this range, right? We talked about ranges, Trip talked about ranges, and we're looking for upside targets. Where would we be interested in getting in to a short position on this massive run up? Well, I like to zoom out, look at the higher time frames. And what do we notice right here? I mean, this is as textbook of an example as you can find. Right here, we have a really nice Kumo pocket, right? So if you had just zoomed out and saw this Kumo pocket, you say, there's a high likelihood that on the first test of this Kumo pocket in a downtrend, price is likely to reject, right? So maybe you're not catching the absolute top, that's fine. You're spreading your ask between maybe 9.2 all the way to 9.5, right? So again, 9.2 to 9.5, maybe your stop loss is below or above this swing high, excuse me. And where you're targeting, that's up to you. Maybe you're setting some stops and profit, or you're just tightening right below the Senku span, or right above the Senku span A. And you can get into some really nice short positions on that first tap, right? We talked about the depletion factor. What actually happens when price comes back to retest an untested supply or demand zone? The first reaction is usually the strongest. So again, that's a really nice live example of a weekly Kumo pocket that rejected price. And you know what? You can create a nice strategy setting asks here and targeting somewhere below on a lower time frame. But the high time frame resistance provides context for low time frame trades, right? So you saw this weekly Kumo pocket at 9.5-ish approximately, and you dialed it in. And what did you see up here, right? You saw this rejection up here. Okay, that's a Kumo pocket on the weekly time frame. Maybe I'm looking for shorts now. I personally, when I got down to the lower time frames, like the 5 minute, I actually saw head and shoulders occurring right at this Kumo weekly pocket. And I'm like, okay, this could be a short, right? So just turning off Ichi for a second, just to digress, you saw the weekly Kumo pocket around 9.5. And what do we have here? Well, we have a shoulder, a head, and another shoulder. Here's our neckline, right? That takes you down to an 8.5 target, right on the money. I mean, it's a really nice play. But again, maybe you're playing the price action, maybe you're using Ichimoku to identify high time frame levels you want to sell to inform your bias, right? We talked about directional biases in your trading plan. So moving on, I want to showcase another Kijun bounce play that after we hit this 9.5 top, it made a lot of sense. We talked about that one strategy I like to use after an impulse up. There's a mean reversion followed by a bounce, right? So, you know, just to play it back, hindsight's 2020, but again, price starts making a C clamp, right? We talked about the C clamps. Price makes a C clamp, as we can see here, predicted it's going to make a nice C clamp up till 9K, up until the next 8 or so periods. And this is a mean reversion of the trend. We had this really strong uptrend. So again, we're trailing our bids along Kijun, which hasn't been tapped since this candle back here, right? So again, we're setting our bids somewhere around the 8.5 level. And then we see this potential DBS zone, right? We made a higher high here, so this is a valid DBS zone. So again, we're putting all these concepts together. We have a DBS zone right here. Maybe we're entering, being aggressive and trying to catch the top of it or the middle of it, and we have a stop loss below it somewhere. So again, we let price play out, and where are we going to target? Some other previous support turned resistance. So price plays out, it tops. Okay, we see a little bit more of the C clamp. We see our DBS zone. We see where we'd like to get in, maybe right above the Kijun, right? We talked about Kijun being a high probability fill area. Maybe we have, a tightened stop just below it. It's really up to you. You're going to find what works best. Price continues on. We have a massive dump, and what happens, right? We get right to the Kijun. We get filled a little higher. Maybe we tighten it down below, and we bounce up. This is a really nice play, right? So this is what I'm talking about. When price comes back to the Kijun, it's a mean reversion of this entire nearly 20% move to the upside, right? It dumps down to the 50% fib, 10%, and then from 10%, we get another 5% move up. This is where you can create a strategy just around these components. And I really wanted to showcase that. So as you go on into your trading careers and start thinking of strategies and systems you want to build, do you prefer to trade ranges or trends? I hope you're not trading ranges with Ichimoku. But point being is there are a lot of nuances to Ichimoku using the Kijun bounce, C clamps, Kumo pockets, and the edge to edge that provide an abundance of trading strategies that you can utilize to create a profitable trading system. So again, that was just some live examples that I wanted to walk you through. I hope you get the gist of Ichimoku now. If this strategy and system resonates with you, please feel free to incorporate it, and I'll see you guys soon. Thanks for watching.